Hi guys, hope you're well. Samuel here. And if you're a company director of a limited company, you can contribute pre-tax company incomes to your pension pot. What's more, because an employer contribution counts as an allowable business expense, your company would also receive tax relief against corporation tax. So can I contribute to my pension via my limited company? Well, in short, the answer is yes. In fact, pension contributions are amongst the few remaining tax breaks available for limited companies. Putting money into your pension isn't only about saving for retirement, but is also a tax efficient way of using profits from your business. So as a company director of your own limited company, you can contribute to your director's pension, both as employer contribution and as an individual. And it's possible to claim pension tax relief on both. However, contributing through your limited company is usually more tax efficient than contributing your funds as an individual, as you reduce your company taxable profits and your corporation tax liability. So the question is, how much can my company contribute to my pension as a company director? Unlike personal contributions, there's no limit to what the company can pay into your pension and obtain tax relief, providing it meets HMRC wholly and exclusive test. So employer contributions count towards your annual allowance, which is currently £60,000, which went up on the 6th of April 2023. While tax relief is also available on up to 100% of your earnings. If you have a large amount you would like to contribute, you may be able to benefit from the carry forward rule. Now, what is the carry forward rule? This lets you use annual allowance that haven't been used over the previous 3 years, as long as you've been part of a registered pension scheme during that time. So if you don't use your total allowance over the last 3 years, you can in fact use the leftover amounts to boost your contributions. So the question begs, how much could I save by contributing to my pension via my limited company? Well, a company director can personally contribute £60,000 or 100% of PAYE income and still get tax relief. Depending on your earnings, you'll receive tax relief at your highest marginal rate, either 20%, 40% or 45%. For the 22-23 tax year, the corporation tax rate is 25%. If you're a basic taxpayer, contributing £100 will only cost you £80 because the government will add 20%. And as a higher rate taxpayer, a £100 contribution will only cost you £60 because the government will pay 40%, made up of 20% added immediately, and then another 20% you will have to reclaim later via your tax returns. See, another benefit is that employers don't have to pay national insurance on pension contributions. The current national insurance rate for 23-24 is 13.8%. So by contributing directly into your pension rather than paying it as a salary, you'll save 13.8%. So in total, this means that your company could save you by paying money directly into your pension rather than paying it in the form of a salary. This may be more tax efficient than personally making pension contributions, especially if you're limited by how much you can pay into a direct company director's pension personally because of the 100% of PAYE earning rules. So how do I contribute to my pension via my limited company? The number one way that you can actually do so is you can make pension contributions from pre-tax company incomes as an employer contributions are classified as allowable expenses. Your business will receive tax relief savings in corporation tax. Number two is that the company direction pension contributions are allowable business expense provided the employer contributes passes the wholly and exclusive test, meaning HMRC deems the employer's pension contribution to be wholly and exclusively for the employer's trade or profession. HMRC will want to establish whether the level of remuneration, which is salary, dividends, bonuses, benefits in kind, pension contributions, is commercially reasonable for work being done. Where the individual is a sole company director and the main generator of the company's income, the contribution is unlikely to fail this test, but always check with your accountant. And number 3 point, how it can benefit. Other factors, HMRC would examine whether, before allowing pension contribution via a limited company, they would check that the pension contributions are more than a company's annual profit. So if your company turns over 20,000 in a tax year, 20,000 will likely be the maximum the company will contribute to your pensions for that year. If you employ staff, ensure you're making similar pension contributions to others in your company who are doing work of similar value. Because of pension schemes' complex nature, it is well worth getting specialist advice from an independent financial advisor. So what are the tax efficient ways to employ cash as a company director? Dividends can be paid to anyone who owns shares in the company, as long as the company is making sufficient profits to cover these payments. They are exempt from national insurance contributions and discretionary, subject to the company being able to afford to pay them. A shareholder receives up to £1,000 in dividends in any tax year before paying tax. You could consider a personal pension SIP, which can offer you a greater range of investment choices. SIPs are also more flexible as you can invest and manage your portfolio regularly. An alternative is the small self-administered pension, also known as SAS. Unlike other defined contribution schemes, a SAS must be set up via a trust and must have more than 11 members. Directors of family businesses often set these up on behalf of themselves and a small number of specified employees to give family members a share in the business assets and pensions. There are various ways to get tax relief if you're self-employed, a sole trader, or a partnership in a partnership, when spending money to operate your business. So some costs you may be able to claim include, but not limited to, office costs, travel costs, staff costs, training costs, advertising, marketing, and things you can buy to sell, as much as stock or raw materials. So you can also get tax relief on things such as charitable donations or child maintenance payments. Please, if you have any more questions you want to ask, please connect with us on the link in the video. Feel free to reach out to us, DM us if you need to, send us an email, we'll be able to ask any questions that you may have. Well, I hope this video has been a blessing to you and you've enjoyed yourself. Look out for more content that we'll be sending your way. You take care and have a great day.